This is Vee Trades, and today I'll be doing a technical analysis breakdown for Amazon. The last time I looked at this company was back on July 8th, so I have about a month's worth of price action to discuss. Before we begin, please take a second to give the video a like and subscribe for more chart analysis. Also, thank you to those who already subscribed and like my videos. It means a lot. Just a reminder that I have no positions in this company, so I'll give an unbiased viewpoint. We'll start out the technical analysis by going over what I see on the daily chart and potential price targets. Then we will wrap it up by looking over the long-term pattern on the weekly chart. So the first thing that I noticed is that Amazon had a nasty sell-off right when the earnings occurred. I'm pretty sure it was good earnings because it looks like they surpassed the estimate. However, the price still dropped because of the technicals were saying the price was kind of weak. So I'm going to show you guys this measured move right here. This was the first leg up. And then this was the second leg up, and it looks like we pretty much met the target. It's very close to it, and that's what we will expect, a correction, and that's what we got. So in the meantime, we could come back to fill in this gap because it's a really big one. However, if the selling pressure is too strong, we'll just continue lower. Next thing I'm going to show you on the daily chart is the range that Amazon was in. So a range is when prices move sideways and goes from the highs to the lows and the lows to the highs, and that's what we got right here. So there's price action moving up and down inside of the range, and if it usually the price cannot sustain itself in the range forever. Sooner or later it's going to move, right? It's going to break out, and that's what we got right here. We had a breakout. So since the breakout couldn't even reach this measured move target, so if price does break out of a range, usually we'll go to the distance of the range itself, which would be this right here. So since we came up short on this push up right here, a sell-off was expected because the buying was weak. So we did come back to test the breakout, which is good. However, we couldn't get like a double or triple test to continue higher. We just fell right through and they created a gap. So what we could do is come back to the top side of the range and continue lower, or if we blast up through the top side again and come back to test it and then continue higher, then that looks better. But in the meantime, it looks like we're just moving sideways. In the past 4 to 5 days, that price has repented to the chart. So there's a good chance that we'll come back to fill in this gap and maybe even continue lower. Since we had a breakout on one side, I can expect to see a breakout on the opposite side. And if we do get that breakout on the opposite side, it could be more than it did on the top side. See how it went pretty much not even halfway to the target. But if we do break out to the lower side or right over here, the target that price could reach is the 2352 level. I'm going to go and show you guys that with a horizontal line and the percentage drop from now on. But that could be end of this year. It won't happen right away. It's not going to just move in a straight line down, and that would be a 30% drop from the price right now. But like I said, we'll probably come back to fill in this gap, touch the top side of the range before moving to the bottom side of the range. Now if price it probably will get a failed breakout on this opposite side if it continues lower, and it might not reach this target, and then we might just continue higher from here to trap out the shorts, because that's what price does. That's what the market does. It creates traps. That's how they move it, right? So over here, all the longs got trapped and all the sellers came in the market. Now if you do the opposite here, the sellers will get trapped and the longs will be entering to get on the next move. So I'm going to go ahead and zoom in on the chart to show you guys this gap right here. Usually price does not like to keep gaps. It was a gap right here and we came back to fill it about a week or two later. So the same thing can occur right here. We can fill in this gap in probably a week or two. So that's pretty much everything I see on the daily chart. Price was in a range. We had a breakout. The price met its measured move and then we sold off. So normally we'll sell off by 2 legs. So this was the first leg down right here, and then this was the second leg. However, we definitely surpassed it by a good amount. So either this looks like a strong continuation to the lower side of the range, or most likely we'll come back first to fill in this gap and touch the top side of the range before continuing lower. But if we don't continue lower and we just fill in this gap and we find support like we did over here on the top side of the range, we'll probably continue higher. But most likely, since we had a breakout on this side, we'll probably get a breakout on this side sooner than later. So I'm going to go ahead and show you guys the weekly chart. So on the weekly chart, the very long-term pattern is an uptrend because the EMA is pointing up and most of the price bars are above the EMA and we're making higher highs and higher lows. If I were to do a very long-term channel, it would be this one right here. We get a lot of touches on the bottom, and if I move it right up to the top, we get the midline acting as resistance right here, and then price broke above it, and now we're finding resistance at the upper side of the channel. So that's where we saw that rejection right here. Back in early July, we just came off the top. Same thing what happened right around here. See how we got rejected and we continued to the EMA. So that's the same thing that could occur right here. This could just be a temporary sell-off for us to continue higher because price looks like it could be respecting this channel right here. So we just have to wait and see. So we're gonna I'm gonna have to wait till this weekly candle closes, because right now it looks like a doji. A doji is an indecision bar, so that usually leads to sideways price action. Like around here, most of these bars don't really have a lot of strong big bodies to them. They're kind of small and has a lot of stem. So we're gonna see how this one closes. If it closes like this bullish bar right here, then that's a good sign that we'll continue higher. So we just have to wait and see. But on the weekly chart, we look definitely more bullish than the daily chart. So that was my analysis for Amazon. On the daily chart, we could go upwards to fill in that gap and maybe continue higher if we don't find resistance. But on the weekly chart, we just have to wait to see how this candle closes. And if it's a bullish candle, prices will definitely probably continue higher, because right on the support side of the channel and at the EMA, and it looks like we could be setting up a potential short trap right here. So we just have to wait and see for the weekly chart. But I'm more bullish on the weekly chart than the daily chart. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised on what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.